Hi, this is Vlad with Tradespoon, where we do the research for you on the fundamental and technical analysis of the stock. And today I want to cover portfolio hedge. Why is it important to hedge your portfolio, especially in the market conditions like today? Stock market is at an all historical high, and last week we had employment numbers were beat analyst estimates, and the stock market is all year high. Right now we see a short-term sell-off based on the news in China. The export data was down 18% last week, where they expected 8% up, and also the GDP numbers from China have missed and analyst estimates, and you see a pretty light sell-off on the light volume that's happening right now in the market. So it's important to know how to hedge your portfolio, and one strategy is building this delta neutral portfolio. Last time we covered option Greeks, and in option Greeks we learned one of the first letters that a lot of the traders are using is the delta. Delta tells you for each of the stock price movement, what is the underlying option price movement will do. And deep in the money calls or puts usually have one-to-one correlation with the underlying stock. So to build a delta neutral hedge, one thing to do is to find an option that moves, option that will move at the same rate or at the half the rate of the stock. So delta of 0.5 means if the stock moves by $1, option will move by 50 cents. And deep in the money options will have delta 1. So if you have 100 shares of Microsoft and you want to build a delta neutral portfolio or delta neutral hedge, you have to find the hedge ratio. And that's what a lot of traders are called hedge ratio, is that you look at, let's say, Microsoft stocks, you have 100 shares, you want to sell at the money options or out of the money options and figure out what the delta is. And the delta will have of the selling of the call will have a negative number because the stock is going up, the price of the option is going to go down. And that's what you want in the market conditions where you want to build a portfolio hedge. So at the money options for Microsoft at 0.5, 50 cents, that means for 100 shares of the Microsoft, you need to buy 2 contracts, which is 200 shares of underlying options. So if the stock moves by $1 up, you will make money on the stock. But on the option, you will lose $1 because it's at the money options at delta 50, so you have to buy twice as many. So the way you do it, you take the number of shares that you have for the stock and you divide it by the options delta. If it happens to be 50 cents, you divide it by 50 and you'll get 2 times the number of stock contracts. And if it's 0.75, then you need to buy 1/4 of the stock. So that's the concept of delta neutral hedge, and this is something that you should carefully consider, especially at the market conditions right now. At Tradespoon, we do research for you, and especially in this market condition, it's important to find stocks that are fundamentally sound and have been scrutinized on fundamental and technical indicators. And even then, when you build your portfolio using qualitative and quantitative research, like we do in Tradespoon, you do need to make sure that your portfolio is hedged, because when the market does correct itself, most of the assets are sell off at the same rate. They're highly correlated to S&P market, so research becomes less important and your position sizing and the way you hedge your portfolio becomes more important. So please look into portfolio hedge, understand how to calculate the hedge ratio, and until next time, this is Vlad with Tradespoon. Thank you.